At a time when much of Canada's real estate market is cooling, one segment is quietly thriving, and it's not single-family homes. Canadian Apartment Properties REIT, CDPYF, just delivered a strong Q2 2025 performance, reminding investors that rental-focused real estate can offer stability even when the broader housing market wobbles. Q2 highlights at a glance. CDPYF, one of Canada's largest residential landlords, reported higher occupancy rates across its national portfolio, steady rental income growth even in softer markets, improved net operating income (NOI) thanks to cost control and strategic upgrades, continued portfolio expansion with acquisitions in growth markets. While some investors feared rising vacancy rates due to market shifts, CDPYF's latest results suggest the company has weathered the storm better than expected. Why CDPYF is thriving amid market uncertainty. 1. Diversified portfolio. CDPYF isn't relying on one hot market it owns and operates. Rental properties across major Canadian cities and select U.S. markets. This diversification allows it to balance softer regions with stronger performing ones. 2. Persistent rental demand. Even with rents dipping in places like Calgary, the demand for well-maintained, professionally managed rentals remains high in most urban centers, particularly for mid-market units where affordability is key. 3. Strategic acquisitions. In Q2 2025, CDPYF focused on acquiring properties in secondary markets with strong population growth and limited rental supply. These markets tend to offer better yields and lower purchase costs compared to Toronto or Vancouver. 4. Operational efficiency. The REIT has invested in energy efficiency upgrades, maintenance technology, and streamlined property management, cutting costs while maintaining tenant satisfaction. Market context. While the national housing market is expected to see a 2% price drop this year, REITs like CDPYF operate in a different environment. Their focus isn't on flipping properties for appreciation, it's on generating steady, predictable rental income. In fact, uncertain housing prices can sometimes work in their favor. Hesitant homebuyers often remain renters longer. Tighter mortgage conditions push more people into the rental pool. Risks and challenges ahead. Despite strong Q2 results, CDPYF still faces headwinds, rising operating costs from inflation and municipal tax hikes, regional rent declines in markets with oversupply, such as parts of Alberta, interest rate pressure while rates have stabilized. Refinancing debt remains costlier than in the low-rate years. Investor takeaways. 1. Resilience in uncertain times. CDPYF's performance reinforces the appeal of REITs in turbulent markets. Investors benefit from rental cash flow without having to manage properties themselves. 2. Dividend stability. Historically, CDPYF has offered reliable monthly distributions, which is a major draw for income-focused investors. The strong Q2 suggests this stability is likely to continue, though. As always, nothing is guaranteed. 3. Long-term growth potential. With Canada's urban population still growing and new rental construction unable to keep up in many markets, the long-term outlook for multifamily housing remains positive. Who should consider CDPYF? Income investors seeking steady dividends. Real estate investors who prefer a hands-off approach compared to direct ownership. Diversifiers looking to add Canadian housing exposure to their portfolio without buying physical property. What to watch in the coming quarter's acquisition strategy? Will CDPYF continue targeting secondary markets or pivot back to primary cities if prices soften further? Occupancy trends. Can the REIT maintain high occupancy if rental markets cool in more regions? Debt management. How effectively will it handle refinancing in the current interest rate environment? Final thoughts. A steady hand in a shifting market. While headlines about Canada's housing market often focus on falling prices and affordability concerns, CDPYF's Q2 results show that well-managed rental portfolios can deliver stability and even growth through uncertain times. For investors, the big question is whether this performance is a sign of sustained momentum or a high point before broader economic headwinds take a toll? Your turn. Do you see CDPYF as a safe haven in Canada's shifting real estate market? Or do you think rental REITs will face tougher times ahead? Share your thoughts in the comments. I'd love to hear your take.